So, this is the second time I'm saying this. I think Alibaba has finally found its bottom. So I think for long-time viewers of my channel, you guys might vaguely remember that I've published a previous video back in November of 2022 with the title, I think Alibaba and Tencent stock has bottomed. And to be precise, it was published on the 28th of November 2022. And I have then superimposed the chart pattern of Alibaba on the right hand side, and you can see that on the time of publication, Alibaba was around $75 to $76 per share. And since then, I believe that you probably wouldn't see Alibaba trading as low as under $70 ever again. Albeit having huge amount of volatility, it went back up to 120, it crashed back down to 80, went back up to 100 and crashed back down to 80 again. So some of you might be wondering, hey, if you made enough of such videos calling the bottom, sooner or later you'll be right. Unless you talk about companies like Tattooed Chef that just got delisted. But anyway, I'm not here to flame or burn any other YouTubers. But I think just to prove another point, I did make a previous video, I think for more than a year now, that I think why Alibaba has yet to bottom back then. Of course, I did outline my suite of reasons of why I continue to stay invested, but if you're interested, you can go back to watch that video. And of course, as always, don't forget to smash that cute little like button like I did here. In case you have forgotten it. So I'm just going to play a very short clip from this previous video back in November of 2022 to look back and see what I've actually put forth and what were my arguments. My baseline argument has always been the same. My only edge against the market is time. I don't believe that this is quote-unquote the end of the Chinese economy. The unwinding is going to be slow, it's going to be painful, it's going to be arduous, but life goes on. I don't know when the deleveraging will end, but I know it will end, and people will become hopeful again. In fact, it's because the sentiments are so bad that it gives me some sort of assurance that we are probably closer to the bottom than we think we are. So I have the patience to wait it out though. I'm not sure about you. Of course, many people will argue that there is no coming back for many of these Chinese companies, and that is exactly where we disagree. So some of you might be wondering, why would I bother making this kind of videos calling the bottoms of some of these stocks? The upside is probably minimal, while the downside is enormous. So even if I'm right, nobody is gonna give me commission, or people that actually earn money from this entire trade itself by buying at the bottom, they probably wouldn't thank me. On the flip side, if I'm wrong, I will probably be ridiculed in this entire social media space. I think this entire notion of trying to publish videos, making sure that I stay accountable, I stay in touch, and I'm still on this platform, even if I'm wrong, speaks volumes in terms of how I conduct myself as a social media personality. There's a certain level of accountability here. It doesn't mean that once my stock pick goes south, I'm just going to sweep everything under the carpet and just goes on with life. So by making these kinds of bottoming videos, number one, it brings certain level of awareness to people that are at least following the stock. And number two, I can look back at some of my different arguments and some of the points that I've made and laugh at how naive or how ridiculous I sound last time. But I think for now, at least, based on my understanding and really keeping a pulse on the entire Chinese market today, we are probably not going to visit the lows of around $70 odd again from Baba. Of course, it might retrace back down under 90, maybe 80 plus, but around 70, I don't think so. Damn, Moomoo outdid themselves again. This time around, they are back with even crazier sign-up rewards. So to celebrate Singapore's 58th birthday, which is happening in a month's time, new users can get up to 720 Singapore dollars in welcome rewards. And the crazy thing is, even for existing Moomoo users, you can actually enjoy Moomoo Cash Plus promotion, which guarantees a return of 5.8% per annum. 5.8% for 30 days on a max of a $80,000 Singapore subscription. So in the event that the underlying fund returns below 5.8% in the month, Moomoo Singapore will reimburse you with cash rewards. So where are you going to find such a short-term instrument to park your funds that give you 5.8%? Oh, and did I also mention that Moomoo is giving out 1-year commission-free trading for Singapore stocks? And for most of you who are interested in Singapore stocks, you are probably eyeing on the high dividend yield on many of these Singapore companies. And you can check out the dividend payout history and calendar in Moomoo's in-house app, making it extremely convenient for investors out here. So don't miss out on this great opportunity to earn your sign-up rewards, especially for those of you who have yet to create your account. I don't know what you're waiting for. Sign up link is in the description. Thank you Mumu for sponsoring this video. So of course, before I make such bold claims, I definitely do have a few data points that I look at and triangulate to get a better pulse and understanding of what maybe the political system or the political leaders are thinking, how they are posturing and positioning some of their policies, and essentially what they think about the entire big tech sector today. So I think just based on the previous video that I talked about, I think a few days back, we were essentially talking about China hitting Alibaba's affiliate Ant Group with a $985 million fine. In my humble opinion, I don't think the market cares about how much the absolute dollar fine is, but instead, what's the symbolism behind this fine? So the entire tech crackdown really started with Jack Ma and his Fury speech, and really just rug pulling the entire Ant Group IPO. So by closing up this chapter with Ant Group, it does complete the entire story. And on top of just this Ant Group fine, just recently, I think Alibaba, Tencent and Meituan was actually praised by Beijing for helping China's tech progress in new signs of attitude change. And you can see that if you triangulate these data points together, it does feel like there is a new posturing on how the political leaders are looking at many of these big tech companies, and it's of course posturing for the better. And I think for investors who follow this big tech closely, some of these big tech companies do have deep roots in some of the strategic industries that China deem as important, such as AI, semiconductor, technology, etc. etc. And of course, there is this new headlines again, talking about how China's tech giants are off leash after years, after the long crackdown, as Beijing primes them to be the economic engine they once were. So yeah, there's a lot of posturing, a lot of storytelling, a lot of change in narrative. These headlines kind of point to the same direction, which is we are much closer to the end of the tunnel. Now, I think in terms of the macro climate, we can't run away, because whenever you invest in China, I think many of the investors' thesis is we are hoping for a recovery. We are hoping that China continues to manufacture, to lift more people into the middle class, yada, yada, yada. But I think in terms of the macro climate today, at least that is revealing in real time, it's not all fine and dandy. So in terms of China's June trade balance, imports are actually down 2.6% year on year, while exports are down 8.3% year on year. So I think on a broader scope, China export data actually do show the health of the global economy. Because let's not forget, even though there are a lot of reshoring or onshoring efforts, China is still the world's factory. And there are many companies, MNCs, global multinationals that are still extremely reliant on China's supply chain. So they can't run away from it, at least not in the short term. And of course, if the global economy starts slowing down, China's GDP is going to take a hit, naturally, by translation. Now, also looking into some of the inflation numbers, I think it's quite interesting where the rest of the world is experiencing a high inflationary environment, including my own country. Many of these necessities are going through the roof. I'm feeling the pinch in terms of my wallet. But at least from China's perspective, their annual CPI went up by a royal 0.0%. Yes, you've heard it right. They did not experience any level of inflation. At least not to the extent of deflation for CPI figures, but I think for PPI figures, which is the Producer Price Index, it's actually down 5.4%. At least for now, for the CPI data, many investors are hopeful that, China is going to step in with a big level of stimulus because they can totally ignore inflationary pressures, and heck, they probably don't even know what inflation means. So I think to prevent this sort of speculations, the governor of the People's Bank of China recently published an article titled Autonomy, Effectiveness, and Economic and Financial Stability of the Monetary Policy. Don't bother, they're all economic jargons. You just have to focus on these few key terms. So Yi stated that the potential economic growth in mainland China is expected to remain within a reasonable range in the future, and they want to maintain normal monetary policy, positive interest rates, and a yield curve with a normal or upward sloping shape. So in essence, investors are probably not going to expect US level kind of stimulus where they're essentially just throwing money to every single Tom, Dick and Harry, wanting them to go out to consume. And I think the property sector has been a long abetted problem. And at least in June, Chinese banks actually did extended 3.05 trillion yuan versus the expected 2.32 trillion yuan. So in terms of the sentiments of the Chinese consumers, Zhou Dafu or Chow Tai Fook, for those of you who don't know, they are essentially in the business of selling gold. They announced their 3 months ended retail sales that is elevated by 29.4%, and in mainland China it hiked by 25.2%. In Hong Kong, Macau and other markets it rocketed up to 64%. And it goes to show that the normal consumers now are just rushing to buy gold, which is a precious metal or some sort of instrument to store the value of their dollars today. And of course, for normal Chinese consumers back in China, household savings at banks actually surged a record high of 17.84 trillion yuan in 2022, and it's up 80% from 2021, according to the People's Bank of China. And we know in 2022, it has been a treacherous time for many of these layman consumers, people on the street, because I think in terms of many of these big tech earnings, you can see that advertising is crashing down, business is very slow, economic slowdown, people are getting laid off left and right, and they essentially front run the entire economic downturn compared to the rest of the world, which is why you can see it's reflected in terms of consumer sentiments. People are not spending money, CPI is non-existent and stuff like that. So this is essentially the macro picture that I'm trying to paint to most of the viewers out here that are probably not as in tune with the Chinese economy today. But in terms of the broad consumer sentiments back in China, we are seeing some things turning a little bit for the better. So despite a slowing economy and a decline in the overall auto sales in China, Tesla and BYD actually achieved record deliveries in their China-made vehicles in the second quarter. And also in the recent Fundsmith report, Terry was also opining on his investment in Estee Lauder, which has a very heavy reliance in terms of the Chinese growth story and recovery story. And he did say that while domestic travel has returned, it seems that Chinese consumers are buying watches, handbags, and other luxury goods first, which was harder to shop for online during the lockdown. And clearly, if the Chinese people are pessimistic of their future, they probably wouldn't even indulge in many of these luxury products. So that's just something to take note of. However, if you're to zoom out and look at the broader investor sentiments, investors do seem like they are trying to buy Chinese stocks for the first time in almost 2 months. But on the flip side, hedge funds continue to sell Chinese equities in June, while Japan saw a record inflows. So I'll leave this data point up to you to decide on who do you think is on the right side of this curve. More importantly, many of these investment banks or top tier banks, just back in December of last year, 2022, Morgan Stanley actually turned bullish on Chinese stocks with a 13 to 14% upside as Beijing quickens their zero COVID exit. But just 1 month back, I think in June, UBS actually joined Goldman, Morgan Stanley in trimming their China stocks view, and they actually reduced their earnings growth forecast to 15% from 20%. So I'd just like to include a side comment here. The investment banks will have to do whatever they have to do. They have to pander to whatever is popular, what's the narrative of the day. Us as retail investors, our edge is probably only our time horizon. We don't have to be running around trying to chase for what is in trend today. So particularly so for the two Chinese tech companies that I do follow on this channel, which is namely Baba and Tencent. So for Baba at least, Brian did tweeted out last week that salient points but a backward-looking analysis on Alibaba's future after Ant Group's fine. So even after the most brutal of environments, Ant remained profitable. Rebuild trust, Friday's market action answers that. And you can essentially see that this is essentially Ant's profit profile. And right after the crackdown, I think profits essentially cut into half from Q1 to Q4 of 2022. But I do like to say that I think in terms of the potential of how much Ant can grow, it's significantly impaired. But I do kind of agree that yes, even in the harshest of environment, Ant still kind of remain profitable. But we do kind of have to temper our expectations and not expect this kind of monstrous growth going forward. And I think even at today's valuation, the market is essentially discounting Alibaba and just assuming that they don't grow because of competition, because of whatever kind of factors you have out there. But based on the recent quarter, at least the earnings consensus from different analysts, there are at least 24 here, they are expecting an 8% sales year-on-year growth rate. Of course, from a relatively lower base comparable. But I do like to think that Alibaba being able to grow 8 to 10%, at least in the foreseeable next 3 to 5 years, wouldn't be too much particularly of an issue. But of course, that's my own opinion and my own valuation model. You make your own decision. Furthermore, I think to triangulate back to Tencent, so this is from Tencent's earnings report, and I just want to focus in that financial year between Q1 to Q4 of 2022, you can see that margins was essentially decimated. At least from a non-IFRS operating margin percentage, Tencent was easily able to hold above 30% margins, but in this very peculiar 4 to 5 quarters, margins was essentially decimated. But thankfully, at least in the recent quarter announcement, they did show some sort of normalization. And I think even for growth rates, for advertising, for many of these other business arms, you do see some sort of normalization. And the negative year-on-year comparables would probably be an easy beat for many of these tech companies, at least for Baba and Tencent, because I do pay a closer attention to them. So for those of you who have a differing opinion, or I do also understand that there are other financial YouTubers or gurus out there calling for a complete decimation of many of these Chinese companies, whether is it the property companies, the tech companies, and what have you not, and it's gambling and stuff like that. To be very, very honest, I've been in this space for quite some time now. I kind of have a pulse and read of the thing, which is why I'm calling for the bottom of Baba again. I'm not too sure, not barring any Black Swan event, of course. I don't know if Chairman C can call for another party congress, but if he does, maybe Alibaba will revisit $60 again. But if not, I think based on where we are going in terms of the trajectory, in terms of the political posturing, many of these economic policies and how political leadership is treating many of these companies, I do think that we are much closer to the end of the tunnel and we are seeing some light. So with that, I'll see you in the next video, but more importantly, I'll finally see you on the moon. Goodbye!